In this video, we're breaking down two unstoppable software stocks that institutions have already started buying before the next major breakout. By the end of this, you'll understand exactly why these companies are positioned to dominate the next decade and why the smartest money is quietly building positions right now. These are platforms that sit at the core of how modern enterprises operate. They control workflows, manage critical data, and become so deeply embedded that removing them becomes almost impossible. That is where real long-term compounding begins. Let's get straight into the first stock. ServiceNow, ticker symbol NOW. To understand why ServiceNow matters, you have to zoom out and look at how large organizations actually function. Every enterprise is a complex machine made up of thousands of moving parts. Internal requests, approvals, IT systems, employee processes, customer service operations. Most companies struggle with inefficiencies because these processes are fragmented across different tools and departments. ServiceNow solves that problem. It acts as a central platform that brings all those workflows into one unified system. It allows companies to automate tasks, streamline operations, and reduce friction across the organization. That might sound simple, but it is incredibly powerful. Because once a company builds its internal processes on ServiceNow, it becomes deeply integrated into the organization. You are not just using a tool. You are building your operational infrastructure around it. That creates a massive competitive advantage. Switching away from ServiceNow is not just a software decision. It is an operational risk. It would require rebuilding workflows, retraining employees, and potentially disrupting mission-critical processes. That is what creates high switching costs. And high switching costs are one of the strongest moats a business can have. Now layer on the broader trend. Companies are under constant pressure to become more efficient. They need to cut costs, automate tasks, and improve productivity. This is not optional anymore. It is a requirement to stay competitive. ServiceNow sits right at the center of that transformation. Every time a company decides to automate a workflow or digitize a process, ServiceNow becomes part of that solution. That is why the company continues to expand. It does not just land customers. It grows within them. A company might start by using ServiceNow for IT service management. Then they expand into HR workflows, then customer operations, then security. Over time, ServiceNow becomes embedded across multiple departments. This expansion strategy is one of the key drivers of long-term growth, and it creates something very powerful: recurring revenue that increases over time. ServiceNow operates on a subscription model, which means customers pay on an ongoing basis to use the platform. As they expand their usage, that subscription grows. This creates predictable revenue streams and strong visibility into future performance. And as the company scales, margins improve. Because once the software is built, the cost of delivering it to additional customers is relatively low. That operating leverage is what turns strong growth into strong profitability. Now let's talk about something that is becoming increasingly important: artificial intelligence. ServiceNow has been integrating AI into its platform in a very practical way. It is not just about adding features. It is about making workflows smarter. The platform can now predict issues before they happen, automate decision-making, and reduce the need for manual intervention. This increases the value of the product. And when a product becomes more valuable, pricing power increases. Customers are willing to pay more because the platform is delivering more value. This is a key driver of long-term revenue growth. Now here is where things get even more interesting. Institutional investors are paying attention. They are not chasing short-term hype. They are looking for businesses that can compound over time. Companies with strong fundamentals, durable competitive advantages, and large growth opportunities. ServiceNow fits that profile perfectly. You have a business that is deeply embedded in enterprise operations, generates recurring revenue, and continues to expand its capabilities. That is exactly the kind of company institutions want to own early, and the data supports this. ServiceNow has been delivering consistent double-digit revenue growth, driven by both new customer acquisition and expansion within existing customers. Its retention rates are extremely high, which means once customers start using the platform, they rarely leave. And that is what creates long-term stability. Now think about the total addressable market. There are still thousands of organizations that have not fully digitized their workflows. Many are still operating with outdated systems and manual processes. That represents a massive opportunity. Every company that decides to modernize its operations becomes a potential customer. And every existing customer represents an opportunity for expansion. This is not a saturated market. It is a growing one. And ServiceNow is positioned right in the middle of it. Now let's bring all of this together. You have a company with a strong moat, driven by high switching costs. You have a business model built on recurring revenue. You have a long-term growth driver in digital transformation. And you have increasing value through AI integration. That combination is what creates a compounding machine. This is not about short-term spikes. This is about steady, durable growth over time. And that is exactly what institutions are looking for. They are not waiting for the story to become obvious. They are positioning themselves early. Because once the market fully recognizes the strength of a business like this, the upside becomes much smaller. That is why understanding the fundamentals matters. And ServiceNow is one of those companies where the fundamentals are incredibly strong. If this resonates with you, you're exactly who this channel is for. Hit the like button, share the video, and leave your thoughts in the comments. Subscribe to the channel so you don't miss out on the next important financial investing update. Remember to do your own research before you invest in any stock now. Let's move to the second stock. Salesforce, ticker symbol CRM. Salesforce is often described as a customer relationship management company, but that description barely scratches the surface of what it actually does. At its core, Salesforce is the system companies use to understand and manage their customers. Every interaction, every data point, every sales opportunity flows through this platform. And in today's world, that is incredibly valuable. Because businesses that understand their customers better make better decisions. They sell more effectively, retain customers longer, and create better experiences. Salesforce sits at the center of all of that. It is the platform that connects sales, marketing, customer service, and analytics into one unified ecosystem. That creates a powerful competitive advantage. Because once a company builds its customer data infrastructure on Salesforce, switching becomes extremely difficult. You are not just moving software. You are moving your entire customer intelligence system. That is a massive barrier. And just like ServiceNow, it creates high switching costs. But Salesforce has another advantage. Scale. The company operates at a massive scale, serving organizations across industries and geographies. This allows it to invest heavily in innovation, particularly in areas like artificial intelligence. Salesforce has been integrating AI into its platform to help businesses automate tasks, generate insights, and improve decision-making. This is not just a feature. It is a transformation. Because AI allows companies to do more with less. It reduces manual work, improves efficiency, and enhances customer engagement. And as these capabilities become more important, Salesforce becomes more valuable. Now let's talk about growth. Salesforce generates the majority of its revenue from subscriptions, which creates predictable and recurring income. But what makes the business even more powerful is its ability to expand within existing customers. As companies grow and their needs become more complex, they use more of Salesforce's products. This increases revenue without requiring new customer acquisition. That is a very efficient growth model. Now here is something that stands out. Salesforce has been improving its profitability. The company has focused on cost discipline and operational efficiency, which has led to expanding margins. This is important because it shows that the business is not just growing, but also becoming more efficient. And that is exactly what institutional investors want to see. They want companies that can grow while also generating strong cash flow. Salesforce is moving in that direction. Now let's look at the long-term opportunity. Every business needs to manage customer relationships. That is not going away. In fact, it is becoming more complex. As companies interact with customers across multiple channels, the amount of data increases. And managing that data becomes more challenging. This is where Salesforce excels. It helps businesses organize, analyze, and act on that data. And as the volume of data continues to grow, the importance of platforms like Salesforce increases. This is a long-term trend, and Salesforce is positioned to benefit from it. Now let's connect this back to institutional buying. Large investors are looking for companies with strong competitive advantages, recurring revenue, and long-term growth potential. Salesforce checks all of those boxes. It has a dominant position in its market, a deeply embedded customer base, and a clear path for future growth. And with improving profitability, it becomes even more attractive. Now here is the bigger picture. Both of these companies are not just benefiting from current trends. They are shaping the future of enterprise software. They are becoming essential parts of how businesses operate. And that is what creates long-term value. Because when a company becomes essential, it becomes very difficult to replace. That is the foundation of compounding. This video is brought to you by Value Stocks Investing Master Course. If you're looking to grow your wealth by investing in solid, undervalued stocks, but not sure where to start, I created the Value Stocks Investing Master Course to teach you how to identify great companies, make smart investment decisions, and build a portfolio that lasts. Click the link in the description and pinned comments to get the course today and take control of your financial future. Now here is the question you need to think about. Between ServiceNow and Salesforce, which company do you believe has the stronger long-term advantage when it comes to being deeply embedded in enterprise operations? Is it the company that controls internal workflows or the one that controls customer relationships? Let me know your thoughts in the comments. If you want exclusive stock tips, in-depth analysis, real-time trade alerts, and free investing guides, join the Stocks Galore Patreon today and take your investing game to the next level. Our members get full in-depth analysis on most of the stocks mentioned here. Head over to patreon.com/stocksgalore and become part of our growing community of smart investors. Link is in the description. Do not forget to like the video, share your thoughts in the comments, and subscribe so you do not miss the next important investing update. Thanks for watching, and I will see you in the next one.